Hello, and thanks for tuning in to the first beef and lamb market update of 2019, brought to you by the AHDB Market Intelligence team. Prime cattle prices have been under pressure since the end of summer and have continued to fall as we go further into the winter. Meanwhile, after a seasonal drop, the lamb price has started to pick up going into the new year. Let's kick things off with the beef sector. As mentioned, prime cattle prices have been struggling recently, consistently falling since mid-September. Anecdotal reports, along with Kantar data, suggest that beef has had a tough time in the retail sector of late. This has meant the seasonal uplift in demand in the run-up to Christmas, which usually lifts the price a little in November, was much smaller than usual. The price in mid-December was slightly above the 350 pence per kilo mark. This is below both the 5-year average and the 2017 price, and has remained below both since. BCMS data of cattle on the ground also suggests that there is plenty of cattle around, and with the majority of cattle now being housed for a number of weeks, there will be plenty that are reaching a finish stage, which will also be putting pressure on the price. Prime slaughterings remained elevated in November, with data from DEFRA suggesting an increase of 1.5% compared to 2017 levels. This has solely come from an increase in heifer slaughterings, continuing a trend recorded for much of 2018. Similar to the prime cattle price, the cow price has also fallen significantly in the last couple of months, with this trend also continuing into December. The price has stabilised a little in December though. The price in mid-December was around 200 pence per kilo, which is again below both the 5-year average and the 2017 price. Although the 2017 price was particularly high for the time of year because of a strong manufacturing demand. This demand has been underpinning the price, has subsided a little. Significantly high cow slaughterings for much of the year have reportedly led to cold stores becoming full, which is having a knock-on effect on the current market as processors are finding it harder to place manufacturing beef. Cow slaughterings in November have eased off a little, down 2.7% compared to the previous year, but still the second highest month of 2018. Early indications suggest that slaughterings in December are lower year on year, which may relieve some pressure on the manufacturing market and cold stores going into the new year. Moving on to the lamb sector. A delayed new season lamb crop after terrible lambing conditions, as well as other factors affecting the global marketplace, caused volatility in the lamb price for much of 2018. Since September, however, the price has remained much in line with seasonal trends. The price remained fairly stable for October, however through November and December has been tracking upwards, in line with seasonal trends. At the middle of December, the live weight SQQ stood at 183 pence per kilo, and has roughly followed seasonal trends since. Throughputs continue to be lower year on year in the auction markets, whilst slaughterings continue to be lower also. DEFRA data from November has lamb slaughterings down over 5%, which is likely to continue into December, looking at AHDB estimated slaughterings. AHDB have forecast that approximately 4 million lambs from the 2018 lamb crop will be slaughtered between January and May of next year. This is a 7% decrease compared to the same period last year, which could keep supply tight in the new year. That's it for this month's market update. Thanks for watching, and if you would like to keep up to date each week on the latest developments in the beef and lamb markets, please email the team on the address below.